And hello, welcome again back. And today we're looking at Chapter 3, Problem 2, which is a free cash flow problem. Here we see the income statement for Coronado Corporation in 2019 with sales of $1.2 billion, operating costs of $1 billion, and so on. Net income of $108.75 million, and common dividends of $33.75 million. Assets for 2018 and 2019 are given in the second slide, with cash growing from $10 million to $15 million, accounts receivable increasing from $100 million to $120 million, inventories increasing from $200 million to $220 million, meaning that total current assets increased by $45 million. Net plant and equipment increased by $50 million, so that total assets increased from $560 million to $655 million. Liabilities and equity, accounts payable remained constant at $10 million. Accruals remained constant at $100 million. Notes payable increased from $200 to $220 million, so that total current liabilities increased $20 million from $310 million to $330 million. Long-term bonds stayed steady at $100 million, so total liabilities increased by only $20 million from $410 million to $430 million. Retained earnings increased from $50 million to $125 million. Common equity remained constant, meaning the corporation issued no equity during the year. So total liabilities and owner's equity increased from $560 million to $655 million. What was the net operating working capital in 2018 and 2019? And what was 2019's free cash flow? These two questions are related in that we need net operating working capital change to determine free cash flow. Net operating working capital is equal to current assets minus excess cash minus current liabilities minus notes payable. In 2018, net operating working capital for the corporation was current assets of $310 million minus excess cash of $0, minus current liabilities of $310 million minus notes payable of $200 million. This resulted in net operating working capital of $200 million. In 2019, current assets of $355 million minus $0 excess cash, minus $330 million current liabilities minus $220 million notes payable. This resulted in net operating working capital for 2019 of $245 million. Free cash flow, as defined in our text and in our presentations, is earnings before interest and taxes times 1 minus the tax rate plus depreciation and amortization minus capital expenditures minus the change in net operating working capital. Capital expenditures is determined as the change in net plant and equipment plus depreciation and amortization. And the change in net operating working capital will be equal to net operating working capital in the present year of 2019 minus the net operating working capital in 2018. And change in net and plant equipment will be the difference in net and plant and equipment between the 2 years. The change in net plant and equipment was $300 million minus $250 million for a change of $50 million. Capital expenditures in 2019 was $50 million plus depreciation and amortization of $30 million for a total capital expenditures of $80 million. Change in operating working capital was $245 million minus $200 million, which is $45 million. Free cash flow, therefore, was earnings before interest and taxes of $170 million times 1 minus the tax rate of 25%, plus depreciation and amortization of $30 million, minus capital expenditures of $80 million, minus the change in net operating working capital of $45 million. This meant that free cash flow in 2019 was $32,500,000.